So I've had a few comments recently asking what is going on with HIM stock. Why is this stock performing so well at the moment? And I'm going to straight off say I have no idea why it's doing so well, but I'll kind of give some reasons on why I think it potentially could be doing so well. So hopefully this video is useful for you guys wondering why HIMS is performing so well. Now obviously I own HIMS. I've owned this stock for, I would say, around about a year. I built up quite a solid position. Only little frustrating thing now is that I'm potentially slowing down my buying just because it's been on a good run, and if it does come back to I would say $4 or $5, then I would love to buy a bit more HIMS. But yeah, I'm pretty well built on it, but if I do get the opportunity to buy more at a cheaper valuation, I will. But if it goes on here to do very well on a share price performance, I'll take that 100%. Now, obviously, when you look at HIMS, it's actually near 52-week highs. You see here, 52-week highs was $7.28, and right now we're very close to breaking them 52-week highs, which were actually set back at this point in August. And it's very rare to find a growth stock at 52-week highs at the moment. A lot of them have been killed through 2022. And since the lows around May time, this stock is up 118%. So if you caught that bottom, you are doing very well there. But even if you're averaging across the last year, you're obviously doing quite well as well. Now, HIMS has been frustrating as a growth stock. It's been one of those stocks that has been annoying to hold as a long-term investor at the moment, because you've held this stock and you've seen this business financially perform absolutely amazing and get no rewards. It's been one of those stocks. You've been, as a shareholder, you've been looking at this stock bring out absolutely amazing quarter in 2022, quarter after quarter, and it's one of those where the financial performance of the business has gone like this and the share price has gone like that, and it's frustrating to see. But obviously right now it looks like there's some of them rewards starting to creep in with the business. And when we look at the previous earnings of the business, you'll be able to see here in May time they came out with a solid quarter, massive revenue beat, 93% growth, and they revised the guidance as well from 410 million to 425 million. The next quarter afterwards, you'll see here once again, good quarter once again, massive beat on the revenue, 87% growth, moving more and more to profitability as well. And once again, they hiked up their outlook once again. And then we got into the last quarter and you're thinking they can't do it again, not another quarter this year, and they did it. They once again moved more and more to profitability. The revenue grew 95% year over year growth, a massive beat once again, and once again they then hiked up their guidance. But you'll be able to see across a year, that really had no effect on the share price of this business. If we go out a year out, you can see here, them bringing 3 quarters out of this year that were absolutely amazing hasn't really had any benefit in the share price until recently. Only recently have we seen a benefit in the share price, and this here, as you can see, is up 12% in the last 5 days. In the last month is up 26%, and when you compare that to the S&P 500 that's had a sluggish few days where it's down 3%, and in the last month it's been pretty flat. In this period of time, you would expect probably growth stocks to underperform the market right now. How has HIMS been at the moment outperforming the S&P 500, and all of a sudden why has it suddenly gained so much attractiveness? Well, I think this is the reason why. If we look at HIMS at the moment and what analysts were forecasting long term, only I would say 2 months ago, if you actually looked at the longer term picture of HIMS, you'll actually see here that the analysts are now forecasting them to move a lot closer to profitability in 2023 into 2024. And previously, if you had a look at HIMS, what analysts were forecasting before this was updated, they had HIMS to still carry on losing 40 million a year, 20 million a year, and they were forecasting not really anywhere close to profitability. But you can see here they are now forecasting HIMS to move to actual closer to profitability. So I think there's a little bit of analyst catch up here where they're going actually, oh, this company's actually moving a lot closer to profitability, and the revenue growth is still fantastically strong here. But I think also there's this gem that's appeared in the last quarter. In Q2 it first arrived, and then I think in Q3 we got the confirmation of this, and I think this changed the whole how Wall Street looked at this growth stock. And that was this line here. In the last earnings they said they're expecting now to move to profitability, and it's going to start beginning in Q4, and they actually are going to be a business that from Q4 moves to profitability, achieves adjusted EBITDA profitability, and does that in 2023. And now that they're confirming they're going to move towards profitability and will be profitable going forward, everyone on Wall Street and all these analysts are absolutely in shock. And there's been a little bit of catch up here on the forecast, but even before that, they weren't expecting anywhere close to profitability. Now, we've known for a while as investors that have been following HIMS, every quarter they've been getting more and more closer to profitability as the losses have been coming down. So us as investors, this isn't a shock for us. We knew that they could potentially be hitting profitability in 2023 about 12 months ago. But now it looks like analysts are finally, now there's the confirmation here, and now that we're practically a month off them potentially confirming this, now that it's official out there, analysts are changing and Wall Street are changing their business models around this. Like, hold on here, HIMS is going to be a stock that just come off 95% year-over-year growth, and it's profitable. Like that's a scary combination. When you've got a company that's profitable but then growing that much, that's a scary combination. And when you look at HIMS and what HIMS has been, valued at previously, I mean, what they're going to do this year, they're going to do about 520 million, nearly $500 million in revenue. And the business is valued at like it's been on a good run. It used to be even lower than this, but 1.4 billion. It's under 3 times sales. I think even before this run, it was like 2 times sales. We're valuing this at a company at 2 times sales that's growing nearly triple digits and going to be profitable. Like, hold on here, we've massively balls this up here. This company shouldn't be valued here at these sort of levels. And as I said for a while on this channel, HIMS is one of the standout stocks to me that I look at $7 now, but even when it was, $4 or $5, and I was like, it don't make sense. You could easily say that HIMS right now should be a $15 stock because you're going to have so much growth, great gross margins, moving to profitability. You could easily come up with a valuation that HIMS should be over $15 right now. And I think there's a bit of a reality check of Wall Street at the moment going, we've got this wrong here. Like, we shouldn't be valuing a stock that's going to profitability and growing this fast at these sort of levels. And that's probably why there's a little bit of catch up here. And I've witnessed this in 2 stocks that I've owned, 2 stocks that performed absolutely amazing for me, where Wall Street ignored the fundamentals for so long, and then they hit profitability and they went, we balls this up. Like, we didn't realize they were going to, do these sort of levels of growth and then be profitable. And it's reflected very quickly in the share price. One of them was Tesla. Moving towards the back end of 2019, moving into 2020, Tesla started to make a lot more profit, and they basically said in 2020 there's going to be their first full year of profit. And that was obvious in 2019 that was going to start happening. As soon as they started mass producing the Model 3, it was like, this is quite clear, this is going to come profitable within the next 12 months. And it's got crazy growth. And what happened with Tesla? Well, if you look through, 2019, 2018, $20, still $20-ish, $19, $18, even towards 2019, it even dropped to $15, $20 again. And when we start seeing, this was posted on January the 30th, 2020, you'll be able to see here that eventually when that happened, you'll see here the share price, within a couple of months already skyrocketed and double up. And from there, the stock went absolutely crazy, came a 10 bagger. And that was Wall Street very slow to realize and accept Tesla is now a massive growth company, mass producing EV cars, and is now profitable. And there was a very quick catch up from Wall Street to go, this should be valued way high, and everyone jumped on that. The other one that I owned that had something very similar was Square. So I became a Square shareholder in around about 2017. I'd be so impressed if any of you guys are watching the YouTube channel back in 2017. But this stock came on the stock market, kind of held around that kind of $12 mark, and you'll see here through 2015, 2016, it was around about $12, $10, $9. And then as it moved into 2016, 2017, we finally had Square start to get some better reflection on the share price of where it should be valued. And then through 2017, it had a fantastic year as the year went on. 2018, it had a very good year as it went on, and obviously the stock then was up 442% within a year and a half basically. And even if you go even a bit longer than that, at one point this one came a 10 bagger until we entered the 2022 crash that we're in right now, and it performed absolutely amazing. And what happened with Square as well? Square was exactly the same. People started noticing, this stock's growing at really good rates on a revenue point of view. And then you look at it and you go, the company is likely to start posting profit in 2017. It's going to come a profitable year in 2017, moving into 2018. And that's what started to happen with Square. And people started looking, well, you got insane amounts of growth and it's also going to achieve profitability. And eventually people went, oh, we're actually valuing this stock way too low than what it should be. And it started to get a better reflection on the share price of what it should be. And when you look at HIMS, don't you get deja vu of that? Don't you get that where it's valued at 2 times sales and it's got insane growth and moving to profitability? And you're like, surely this should be a lot higher than where it is right now. And that's exactly the vibes that we're getting off HIMS. So I'm not saying that's what's going to happen, but just that when I've noticed this previously, where you've had a stock that has fundamentally performed so amazing and then not got the respect, but then it turns profitable and then still grows at crazy rates, all of a sudden you have Wall Street going, we should have this a lot higher. And that's just 2 stocks that I've owned personally that I've noticed that happened previously to. And HIMS stands out as very similar. When it was, $4 or $5, I was just looking at the performance and the share price going, it's just so disconnected right now. So I'm not saying that's happened and it is going to happen from here, and we could see the stock fall to $5 again, as frustrating as it would be. But if you were asking me to think of the reason why potentially we're starting to HIMS get valued at a lot better levels or closer to where it should be, I think it is the combination of good performance and Wall Street being very slow to pick up the profitability drive in it, which obviously I think if we get that confirmed in Q4, which for him should be around about, obviously finishes in December, but would be confirmed when they do their earnings, probably the first week in February, I would say. If they confirm that, then I think that would obviously help the business as well do very well. So yeah, that's my thoughts on what's going on with that stock at the moment anyway, for you guys that were interested in it. And obviously I'm a big HIMS fan, and it's one of the stocks that I've got high hopes for in the next 5 years. Doesn't only just double for me, but actually does come a stock that could bring out the big returns of a 5x to a 10 bagger, hopefully, especially if it keeps up the growth and profitability. So hope you enjoyed the video anyway, guys, and I'll catch you in a bit.